us. So my name is Don Fick, and I'm the Executive Director of Repair Café, North Carolina, and I'll be your moderator for this discussion on liability. We're going to be exploring the different kinds of risk that you have as an organization doing repair, tool libraries, and similar kinds of activities. And we're going to be looking at the kinds of insurance products that exist to help you protect yourself and your fellow volunteers in the event that you do become exposed to some sort of liability. In order to have this discussion, I'm certainly not the expert, so we've brought in two people who are going to help us with this. Our first speaker will be Justin Avellar. Justin is a Seattle-based lawyer working with small business and nonprofits on a wide variety of legal issues. He's also an active volunteer and board chair at Seattle REconomy. That's the parent organization of the Northeast Seattle Tool Library. And we're going to start with Justin speaking for about 10 minutes. And then following Justin, we have Julie Bernhard joining us. Julie is the External Relationship Director of the Nonprofits Insurance Alliance. Nonprofits Insurance Alliance is a nonprofit that helps other nonprofits find insurance solutions. They are operating in 32 states and the District of Columbia. So wherever you are, there's a good chance they can help you find solutions to your insurance needs. Julie is also the webinar manager for Blue Avocado, a free online magazine for nonprofits, which is published by the Nonprofits Insurance Alliance. So we'll get started with Justin. And Justin, I think you should have permission to share. If you'd like to go ahead and share slides, and you can begin speaking when you're ready.
Great. Just finishing setting up my end. Let's see.
And while Justin is speaking, as well as Julie, if you have questions, please go ahead and hold them for Q&A at the end, or put them into the chat, and we'll try to bring those back at the end. But we will hold discussion until after Julie's presentation.
Mm-hmm. Okay. Great.
Looks good.
I will. Got a lot of screens on right now. Bear with me. Okay. So I thank you very much, Don, for that introduction. It's nice putting a face to the name. We had only spoken on the phone. So as he mentioned, I'm a lawyer. I'm licensed to practice in the states of Washington and New York. I work a lot with small businesses and nonprofits, and I'm here to discuss liability that could impact your small organization, whether it's a nonprofit or whether it's an association or an LLC or a corporation. A lot of these liability issues run across all types of organizations because you're all doing similar sorts of activities. So we'll just sort of I figured we'd dive right into thinking about what liability is and why it matters. Liability generally is when there's just it's just an obligation that you owe to somebody, whether that's money, like you have a creditor, that would be you have a liability to that person in accounting, or when you fail to take care and the harm is done to someone, you have potential liability to that person when there was a duty of care. And there's a risk of liability anytime you have a duty of care, an obligation to somebody. And that can happen anytime you invite or host somebody onto your premises. That is, if that person's not trespassing. Say you have a cafe and your doors open and you're open, an open sign, you're inviting people in to come into your business. And once you do that, you have a general obligation or a duty to keep those premises safe. So that's why you'll see at a grocery store when somebody's mopping the floor that they put a danger or caution wet floor, because they have an obligation to their customers that they've invited into that store to make sure that they know whether they have a safe way to walk around the store and they're not at risk of falling and hurting themselves. The same goes for if you were to have a lot of things piled up on top of your furnace or an area that runs a fire risk, you are putting people in harm's way that you've invited onto your property. That same sort of obligation can be created when you're lending a tool to somebody, because that person, when you give them one of your items, they are anticipating that the tool will work safely and it will do the task that it's been promised or suggested that it will do. That a hammer will be available to hammer things and extract nails. Or, the same goes for more complex tools as well. The sewing machine will probably not catch fire. That duty is also created when you're offering expertise to somebody, because there's can be an expectation that the person who's being given the expertise can rely on the expertise being given. So when you're telling somebody how to fix that toaster that we were talking about in the last session, if you're showing yourself to be an expert in the field of maybe electrical work or mechanics, that person might have you might have created an obligation where that person can rely on what you're saying to create something that is that's going to work and going to work safely for them. Because I'm a lawyer, the risk is that somebody will injure themselves and then sue you. They might injure themselves using a borrowed tool. They might be injured by the person who borrows the tool. They might injure themselves, or someone else might be injured based on the advice that you gave, even if it wasn't faulty. Let's move on to the next slide. And so what I've already sort of previewed is that individuals can be at risk. If you don't have an LLC or a corporation, and a corporation it includes a nonprofit corporation, you have no liability protection, which means, and I'll go into that a little more in the next slide, but that means that if you don't have one of those corporate entities, such as any sort of company that's registered with the state that you're in and doing business in, you could be personally liable for lending a tool or giving someone advice, or making a repair. If there's a lawsuit that comes out of that person who is injured will be suing you directly, and that could cause you to go bankrupt. If somebody dies, you're looking at the loss of life damages, which could easily hit millions of dollars, depending on how it gets very complicated, and juries can go in all sorts of directions, but you could easily face hundreds of thousands, if not millions of dollars in damages for somebody's death. When you have a company that's such as an LLC or a corporation, including a nonprofit corporation, that creates a liability shield. So there might still be a chance for personal risk if you're operating under that company, but it is much smaller. So what is a liability shield? As I was talking about just a moment ago, LLCs and corporations are legal entities. They are incorporated in a state and they exist independently from any individual person. Microsoft is not connected to a person. There are shareholders that own stakes in the company, but the existence of the company does not depend on one person. It is its own entity. In the law, it's considered a person. So people can own or operate an LLC or a nonprofit, but they are not the entities themselves. This might make more sense if you're thinking about a nonprofit corporation, because nobody owns a nonprofit, is part of the community. So the people that are running it and that are involved in it have no stake in the company, in the nonprofit itself. They might have, they probably want the nonprofit to succeed, but they don't own any of it. It exists on its own. Person is not an LLC, but an LLC is its own person. That is a very strange and abstract concept, but that's how the law considers it. There's really no, you can't really go behind it and find anything else for besides that's what we've created in our code, our system of laws, that we consider something like an LLC or a nonprofit corporation to be its own legal entity or a person. And liability for one of those companies is related to what the entity was doing or not doing. So the tool library is created as a nonprofit corporation, and then the tool library lends somebody a tool, and somebody's then injured using that tool. They cut their arm off. If they're going to sue, they're going to probably sue the tool library. And people that are working under the tool library's umbrella are going to have a higher chance that they will be protected from the liability of that lawsuit, because they are working for that, volunteering for that nonprofit. But these shields are not infallible. A liability shield can fail if people blur the lines between the corporate entity and themselves. This can happen when somebody's using a personal bank account, as an example, a personal bank account for the company's money. If you intertwine your personal assets and the company's assets, or you're maybe operating out of your home, and you're not separating out a part of it that's clearly for the entity. Maybe you have items strewn throughout the house, or you're using your personal email address, or especially when you have a business email address. These are all things that a court might look at to say, well, actually, this company doesn't really exist as its own entity. It's really blurred. So the plaintiff, the person who was injured, can effectively sue both the company and you, because you've made it so they are one and the same. But the court's also going to look at whether somebody was a bad actor. So if you're doing everything right, if you're following all the rules, you're going to have a much lower chance of a court saying, well, looking for a specific reason to say that you and the company are one and the same. That being said, courts can really go make their own law. It really depends on the situation and the judge. This could also go for board members, but it's a pretty high standard to go after board members of a company or a nonprofit. If any of you know about corporate responsibility for boards, they have 3 duties: a duty of care, a duty of loyalty, and a duty of obedience to a nonprofit or a company. The duty of care is simply acting reasonably when you're coming to board decisions and paying attention to them. The duty of loyalty is basically no gain at the company's expense, which is already prohibited by the IRS. So if you're a tax exempt organization and you are putting your financial interests ahead of the nonprofit, and you are causing yourself to gain money or gain deals at the nonprofit's expense, you're probably violating some laws in the Internal Revenue Code. And the obedience is to simply that you're working as a board member to help fulfill the purpose of the company or the nonprofit. So these aren't necessarily onerous things that you have to do. These are basic things that most people will want to do as a board member to begin with, even without knowing these duties. You generally join a board to make sure that the organization succeeds and to be an attentive and responsive board member. So it's a pretty high bar for somebody to sue individual board members and succeed. So what can you do as an individual or an association that's working with people on repairs or sharing? The first thing would be to form an entity, form a corporation, or form an LLC. It doesn't have to be a nonprofit. There are many different types of entities that are suited to different business needs, such as cooperatives, and there are a lot, and it depends on the different states. But most of these will provide you with that form of liability shield that you need. And also make sure you have a good waiver of liability agreement that the people that are working with you, the members or the users, the customers, sign. You have to it has to let your customers and members know their risk. They're taking on the risk themselves, and you're not shouldering the risk for them. That something like the tools, they might not work properly, or the advice might not work in their specific situation. I think key to this is not to advertise yourself as an expert without being licensed in that field and having proper professional liability insurance. So if you're very knowledgeable about electrician work, but you're not a licensed electrician working under your company's name, try not to say, to explain to when you're advising people, telling them that you are an expert in it. You can provide advice, but you don't have to provide advice as an expert. You can make clear to customers, members, users that it's just a suggestion, and that might be how you do it. But you're not necessarily, that's not necessarily the only way or the best way. And another idea would be, think about having people fix things themselves at the cafe or wherever you are. That way you can provide advice and you can empower people to do their own fixes, but you're minimizing the risk of doing something without having a proper license. And finally, I think, and this will be the end, Julie will take over after that, and make sure you have good personal insurance and maybe even an umbrella policy, and make sure your business has good insurance too. Because most people are great. Most people that want to be in this area and want to be fixing and sharing are awesome people. I would say 99% of the people I've interacted with in this area have been just excellent, and don't want to sue, and totally understand if they're taking something like a tool, it might not work. It might not work properly. They might hurt themselves. That's just how fixing stuff goes. But you have to be ready, because one person could ruin it for everybody, and you have to protect yourself against that, basically that one bad actor, so everyone can continue doing this good work and having an awesome and collaborative experience.
Thank you, Justin. That's also a great segue to Julie's presentation. So, Julie, you're on mute, and you can begin sharing your presentation when you're ready.
Great. Thank you, Don.
And Mandy, can we spotlight Julie? Oh, there we go. Oh, good. Okay.
Can everyone see my screen?
Yes, looks good.
Okay, great. Yeah, so today, what I really wanted to go over is a good follow-up for Justin, what he just spoke about, is talking about coverages and then limitations that you're going to be finding in the marketplace. So when we're talking about coverages, basically there's three things that we see that truly drive nonprofits to secure coverage in the first place. And the first one is having statutory obligations. So things like if you have a paid employee, then you're going to want workers' comp. If you have autos that are owned by the nonprofit, auto insurance is required. The amount of coverage, it varies by state. So what I see most often that drives nonprofits to secure insurance coverage, however, is contractual requirements. And I'm not sure how many makerspace repair organizations are involved with grants, but it's very common in the nonprofit world for them to secure grants, usually some kind of program development award. And the grants usually have several stipulations, including one for insurance. So in order to get the grant, they have to have the insurance in place. And if the individual with the grant, it's usually who dictates what type of coverage and what type of limit that you're going to want to have. Also, a lot of nonprofits, they raise funds throughout the year. They have fundraisers and events. So sometimes the hall that you're planning to rent out or the venue that you're going to use for your event, they're going to ask to see a certificate of insurance. And it's verification that your organization has coverage in place. So simply having an event for a first time really force a nonprofit to consider getting that coverage. I've also worked with nonprofits who came to us because they had asked someone to sit on their board of directors, and the person indicated that they were not comfortable sitting on the board unless that organization had a directors and officers policy in place. So that's something else that really drives nonprofits to get coverage. And this is a list of coverages. I'm not going to spend a ton of time on all of them. Most of you might be pretty familiar with some of these. General liability, so that's the core coverage that we see with a lot of nonprofits. That's what's going to provide the coverage for the nonprofit itself. If someone wants to sue the nonprofit, it provides coverage for your volunteers, your activities and events, those types of things. I know I mentioned workers' comp again. I also mentioned directors and officers. It's a really popular coverage. A lot of nonprofits are unclear that if they don't have the directors and officers coverage, their board is not covered by the general liability policy. They're separate policies. So it really just depends on your organization and what its operations are to determine what types of coverages you need. And in the nonprofit marketplace, nonprofits work through brokers. And if you don't have a broker, one of the services my organization provides is we do provide free referrals to brokers because we're a nonprofit ourselves. And we understand that nonprofits need assistance getting coverage. And we actually have a network of brokers that we work with that specialize in helping nonprofits because it is a really specific niche of the marketplace. A broker can really sit down with you, help you understand what types of coverages you should consider and why, and then go out. They have the contracts in the marketplace to get you the quotes that you're looking for. So that's something that we can help you with. But it's always good advice to be working with a broker, someone who specializes in helping out nonprofits, because they can really help guide you in the right direction. So when you're considering limitations for insurance, I actually spent some time with our claims department to get a better feel of some of the issues that we have with organizations such as yours. So to begin with, we decline products completed apps. That is not something that we're going to offer coverage for. There might be other carriers out there who offer it. We don't have it. Really, these types of organizations are fairly new. It's just not something that we do a lot of. Also, when it comes to tool libraries, really it depends on the type of tool that you're using. So if nonprofits are using, very large, unwieldy tools, or they, they have, it's a large equipment, ladders, scaffolding, wood chippers, camping stoves, those types of things we've seen, they have a high severity of loss due to failure to maintain or properly use. So we are more comfortable with general equipment, small power tools. What our underwriters are looking for when they're writing these types of exposures is really they want to see that there are processes and procedures in place, and that people are being taught how to use the tools correctly. For repair cafes, again, I mentioned we're going to exclude those products in completed operations. We have seen a lot of claims arising from situations where maybe someone's working on a microwave and they open up the electrical control panel to fix it, and someone takes it home and it sparks a fire, causing damage or injury. That's something that they can go back and claim that the nonprofit did to the nonprofit. So that's something to keep in mind for repair cafes. And for maker spaces, we usually ask a lot of questions pertaining to controls that are in place, especially if the organization is doing any type of welding or, again, our concerns are both the bodily injury and property damage. Other considerations to keep in mind: if you are working with any one-on-one contact with unsupervised children or any kind of elderly disabled person on a one-on-one situation, you're going to want to have improper sexual conduct in place.
Excuse me, Julie.
Yeah.
We're gonna lose our breakout room in just a couple.
Oh,